So again, our quick little disclaimer here, this is for general information purposes and entertainment. I want to real quickly talk about what a hot stock is, because I think there's some misnomers. Hot stocks, in my opinion, are stocks that are always talked about in mainstream media, the ones that are getting pumped and dumped by major institutions and firms, and honestly, just the CEOs, as companies like Nikola may tell you here, and we'll look at that one shortly. They could also be part of that herd mentality. One of the phenomenons we've seen recently has been Robinhood and how some of their traders kind of point this market in a direction that it may not need to go, and that creates these hot stock scenarios. So we're going to break things down here a little bit as we progress by looking at two other instructors from Online Trading Academy. So I will be the host here. We have with me today, we've got Brock Pierce and we have Jordan Matthews. You guys may know them from the Academy. Welcome, guys. How you guys doing today?
What's going on? Hey, everybody.
Doing great.
Awesome to have you with us. You get to balance me out because sometimes I get a bit animated when talking about the market. So I'm going to try to take a step back, hide in the shadows, and let you guys discuss this. Before we dive into what are those hot stocks that you guys are keeping an eye on and where might be those interesting points, real briefly, Brock, tell me a little bit about your background and kind of your trading style so our viewers know what we're looking at here with your analysis.
So my background really comes from OTA itself. I've been around the OTA world for, 15 years now almost. Started as a student back in like 2007, 2008. My dad's also gone through a bunch of classes. So that's really where I got my foundation from. And I like to say that I like to trade everything, all the different asset classes, and really in all different perspectives as far as long-term to short-term. So I try to be a jack of all trades, as I guess you could say, is kind of my motto. So that's a little bit about me. I've been teaching classes through OTA for about the past 6 to 7 years. So it's good to be on this webinar with everybody.
Yeah, good to have you. All right. Jordan, tell me a little bit about your background.
No problem. Hi, everybody. First of all, welcome. It's a pleasure to have everybody here. My background is about 8 years ago, I started as a student. I took every single class that was offered. I was totally enamored with what I saw, and I've been through all the different programs. And at this point, I've kind of settled on really being kind of a futures, options, and kind of more on our long-term wealth side. So futures is my day trading vehicle, options is my swing trading vehicle, with wealth management, which of course is our not proactive, strategic investor course, which I have the pleasure actually of teaching this week. So we've got about 100 students there. As far as kind of my journey, 8 years with the Academy, been an instructor now for about 1.5 years. I joined the XLT team about 1 year ago. And I would say the big thing for me is I love getting to share what others have shared with me and kind of give back. So that's a little bit of my past.
Well, as you guys can see, we've got two traders here with a lot of experience, and I'll sprinkle some of my experience in along the way. I wanted to show some charts to begin with, but I didn't have them all prepared. The challenge with hot stocks, guys, is this. Everybody wants to know what the hot stocks are, because when we think hot stocks, it means it ultimately leads to something like an Apple, an Amazon, these companies that all of a sudden become the biggest bellwether stocks in the world. But a lot of times they turn into be something like a Groupon, which had all this fanfare to begin with, and they just fizzle out and die. And usually retail investors are left holding the bag. So we need to be careful when we look at these hot stocks of the day, because while they may present some opportunity, there's also tremendous risk. And I think we would all agree that our jobs as traders and investors is to manage that risk so we don't take big losses, and hot stocks generally can lead to big losses. So I will turn it over to you guys. I'm not sure who wants to start first, and maybe we can start sharing some screens here and look at some charts. Who wants to go first?
Brock, you want to take it or should I?
Doesn't matter. I'll go for it.
Let's go with Brock. Brock, what do you got to start with?
So the one, of course, everybody's been talking about really over the past, 4 years now, but really over the past year, Tesla. So let's take a peek at that chart. And there's some interesting things going on. And when you look at what Tesla's done in the news really over this past year, and really since the pandemic hit, it's been all over the place. And so you got to be careful with some of these both directions. So, I've heard a lot of people over the past really 4 months or so, it can't keep going higher. It can't keep going higher. It can't keep going up like this. And that's what you want to be really careful of. So really since about, right around the 236 to 240-ish area, we haven't had any supply on this chart. So it makes it very difficult to really try to understand where to be a seller on this. Now, it's okay to be a buyer as long as we wait for quality opportunities. And so, and I like to show the example of the drop during March of this year. And, back then, before it was a, $500 stock, or, before they went through their stock split, that drop right there was almost like a 60% drop in price. Okay. It was pumped up there at the beginning of February, a lot of attention in the news. And, if you're just running out there trying to buy because it's the hottest thing, on the TV or on the internet, you got to be extremely careful. So even during that point in time, there was no supply on Tesla, and it becomes very hard to find where to sell too. And so during that drop in March, if you actually look at a weekly chart, it came back down to a beautiful demand zone, right? And at that same time, it came back to that demand zone. That's when it was getting all the negative publicity, when people are saying Tesla's fizzled out. There's no way this can last. They can't get their cost under, certain amount per car. And there's just no way they're going to be competitive. And, their stock is even, or their company's not even generating a profit. And you can see what happened from that area of demand. It's funny because I kind of got caught up into this as well when Tesla was trading at $200 there before that drop in March. I'm like, there's no way, this company is not even churning a profit. There's no way this can continue. And it's so hard to not just go out there and want to, short it or buy puts on it. But once it broke out of that range it's been in for the past couple years, and it pulled back to that area of demand, you got to start thinking, okay, what is price action actually telling me, right? It's coming back to a quality area that led to a significant rally in price. And so what's funny is that same scenario and situation has started to kind of play out on the daily chart where we are at right now. Obviously it went through this huge run up again at the beginning of August. And then they announced they were doing a stock split which gained even more publicity. And then you got the Robinhood traders coming in, and all of the retail novice and retail public out there pushing this thing higher. And what's funny is the exact high on Tesla there back at the end of August, I believe. Yeah, middle of August. That actually was the day that the stock split became effective. Right. So they did, forgot what the split was, 4 to 1.
Tesla did a 5-for-1, I think. 5-for-1. I think 5-for-1.
The interesting thing about that too is, if you look back at Apple back when it split 6-for-1, when it hit 600, Apple was the same thing. Right as it split, like I'm not even talking about there. I'm talking like from the last split, from like when I was probably still in my teens, and it was the stock split, and that was the beginning of a major correction in it as well. So it's kind of interesting that the stock split seemed to bring about some of that volatility. But anyways, Brock, take it.
I'm curious real quick, Brock. How do you like cap your risk? And what I mean by cap your risk here is you have Tesla. You brought up Tesla. Jordan was talking about Apple real quick. There comes a point where these runs just get so unbelievably long. That Apple run from, sub right around $50 all the way up to 140 on a daily from March. I mean, that's an unbelievable run. And even for the most mature, stable companies, it just doesn't quite mathematically make sense to see the value of a company run that much. Now, Tesla at a certain point was reaching a PE ratio of 1,300. And on my show, I'm going, hey, look, guys, stay away from this thing. If anything, you're looking to be going short this. For you guys, is there a point where you look at let's just call it an established stock like Apple and say, you know what, it's just way too overextended. There's no way I'm going to either go long or short this one. Do you put those kind of circuit breakers in for the hot stocks?
Oh, absolutely. There when you look at the population of stocks out there or equities out there in the market, I mean, there's almost 10,000 different things that we can look at. So there's always going to be that better opportunity or that better looking chart. Our job as traders is to put in the research and the analysis and the work to find those opportunities. Every good thing comes to an end at some point. And, at some point we just have to be more patient and disciplined and wait for price to pull back to quality areas before we start going crazy. And so that's kind of how I approach things.
Yeah, nice. Jordan, how do you look at it? Because I know you, we had a conversation before, and I'd love to get your take on it, because I'm a guy who I do enjoy looking at the news. I think that there's an entertainment factor to it. Watching Elon Musk's tweets or him, smoking one with Joe Rogan on his show, it makes it entertaining to watch.
I have seen that video.
But it sounds like to me in your profile, when you talk a little bit, you don't follow that stuff. You don't care about that stuff. I mean, how do you weed out that noise which is causing these things to move and just focus on price?
I will say real quick, Jordan, sorry to interrupt.
Please.
When he shot the car up in outer space, that sold me on Tesla right there.
No, you've got a good point. I love Apple computers. I've worked on them. I've fixed them. I've been a computer technician. I've done all of that, and I've always loved Apple computers. But one of the things that I have really prided myself on, and one of the things that I actually really feel like I learned a lot at the Academy was, yes, there is news. Yes, things are hot. Yes, things can be exciting. But our job is we get paid for opportunity when we're trading, right? We get paid for taking advantage of some interesting aspect of the market, whether it's supply and demand or catching a trend or something like that. We don't get paid for time invested. We don't get paid for reading the news. We don't get any of that stuff. So for me, when I'm looking at a price chart, I look for the opportunity as opposed to what's in the news, what's hot. In fact, I actually am in my core classes. I always joke, if someone actually called me up and said, "Hey, Jordan, why don't you give the Online Trading Academy perspective to, MSNBC or CNBC News?" I would be like, well, they'd be like, Apple's up 20% today. Why is it up 20%? I'd be like, there were more buyers than sellers, and that's why price went up. That would be my answer. I wouldn't think about the news. I wouldn't even know really what happened. One of my students told me that Tesla was having battery day in my class last week. Didn't even know it was happening. But we still were trading Tesla in the class because it was something that people were interested in. But what I wanted to do was say, hey, let's back away from this. Let's take, cooler heads prevail. Let's see what the trend offers us. And one of the areas that we were looking at, and I had the pleasure of actually being in the class, is if you look back in September, there was a daily price chart. Yeah, you've got it up there. There was a nice little zone right around that 329. And I kept being like, patience, everybody, patience. And this one student was like, I've got to get in Tesla. Like, this is an amazing opportunity. I'm like, yes, it's an amazing opportunity. But if you're feeling it, and this is your first day of core strategy, do you really think that you might be totally tapped into what is actually going on? Or is the news and the excitement, the hotness of this stock getting to you? Is it time to maybe let those cooler heads prevail and let price come to you? So what I'm looking for in a stock, what I'm looking for in a hot stock, is something that, yes, is volatile, yes, has a lot of participation, lots of people wanting to play it, but what I need is opportunity, not, oh, it's in the news, let me go find a way into it. I'm always going to take that other perspective of patience, calm, bring some risk management to it, bring some rules, bring a strategy, and take advantage of it when the time comes. So perhaps, I never care why something is doing it. I'm always like, I don't want to hear the story. I don't care. Price went up because there were more buyers. And if I'm participating, fantastic. So kind of a different vibe.
Yeah, no, it's okay. And I love the fact that you spell it out like that, because I think, especially we got a bunch of people in the room today, you're going to have different styles. You're going to have different personalities, different approaches to the market. And I'll be honest, your approach is probably better than mine because you are removing a lot of that noise. I'll give an example. I finished my show yesterday, or actually right before my show yesterday. I was watching Battery Day. I watched Battery Day live, and it was actually interesting because I brought up a 5-minute chart of Tesla in the after-hour session and watched it go. I like that type of stuff. I think it's exciting, but I agree with you 100%. Without a plan and approach, you're probably going to fail at trading these hot stocks, especially the stuff that's really pumped up. Now,
Sure.
let me ask you both on this one. There has been a company recently that is entering a space that I believe is probably the most competitive and dominated space. What I mean is cloud computing. We know Amazon Web Services and Microsoft Azure are pretty much the kingpins of that space of cloud computing. Yes, there's IBM as well, but those are the big dogs. And all of a sudden, you got a company called Snowflake, which was supposed to do an IPO at $120. Now, of course, doing an IPO, for those that know the process, the underwriter of that IPO is going to do everything they can to get as much excitement about that company pre-IPO so they can sell it at a higher price. The price was supposed to be $120. And what did they do? They went out and they found somebody to buy this stock pre-market or pre-IPO to give it a big boost. And that somebody was Warren Buffett, who never buys IPOs. So now the headlines aren't how great Snowflake is. It's Warren Buffett bought this IPO. And I will bring a chart up for you guys to show you what happened with Snowflake. They say there's no snowflakes, two snowflakes are alike. Here's your chart of snow, guys.
Well,
Here's your daily.
The other thing
I'm going to put a line on the IPO price, which was supposed to be $120. And you guys can see right now where we're at. We are now, 217. So how do you look at something like this, Jordan? I'll start with Jordan and go to Brock. Because this is a hot stock. This is one of the hottest things out there right now because everybody and their mother's talking about it. But to me, this reeks. It stinks of risk.
Sure. So it's funny that this stock shot up so huge, right? The IPO comes out and it times out perfectly with the freak snowstorm that we got in Denver, Colorado. We went from 96 degrees in Denver to 30 in one day and got a huge snowstorm. The next couple days, snow IPOs. It really feels like, there's a game being played that I didn't understand. But no, I mean, with snow, of course, in Denver, it's an 80-degree day. What happens is something like this, you get the crazy news happening, people get involved, sure, but what does snow do on a hot day? It naturally just starts to melt back. And typically, if you jump in on something like this, right, looking at this stock has been just getting crushed. Price comes screaming higher. Everyone wants to jump in. And exactly when everyone feels like they've missed the boat, it's time to take advantage of it. The professional trader says, hey, wait a second. Let's go and talk about this thing is way perhaps overblown. If this thing starts to drop into a different trend, perhaps, right? The herd mentality is go long. We've got to look to do perhaps the other thing. So we're naturally seeing a sell-off in this, whether it continues or not. But, you've got the chart right here on the 1 hour. Right now, what I'm seeing are some pretty clear supply zones starting to kind of pop up here, right about that 240 and that little red candle. And then even if you move up a little bit, these are areas where clearly, go on down to like 240. There's a nice little, even a little bit lower than that. Yeah, you got that area right there. I mean, that looks like a pretty powerful area where sellers won this battle. So as much as it may be in the news, as much as people might be excited about it, if you're going to trade this, now listen, if you are going to, and remember, no action is an action. So I look at this and I say, woo, risk off, touch the stove, burns your hand. I'm going to be very cautious this, but if you're going to, remember, bring some risk management to it, pick your areas and be willing to be wrong, especially if you're looking to buy this, because there really is no data to tell you that there's any real buying that supports your hypothesis. So I don't know. What do you got, Brock?
Yeah, I'd piggyback off of that. Generally my rule of thumb is you don't trade an IPO. You don't trade something that has no historical data on it on the larger time frames, especially. So usually, year to 2 years worth of data, now you're looking pretty good. But something that just started trading, and when you look back to the left, you can't find any type of daily or weekly supply or demand on the chart. I would just walk away from that one. And yeah.
Yeah, especially if there's a bunch of people who own it at much lower pricing, they can afford to not touch this thing for a long time.
Sure.
So just stay away from this one.
It's hard because you get the FOMO, that fear of missing out. And I think that's the danger here. And since we're on the topic of hot stocks, it's very appropriate. Those that might not know how this industry works, the job of an underwriter is he's a pitch man. He's out there with a megaphone screaming at the market, you need to buy this stock, buy snow, buy snow. And he's doing everything he can to generate interest. What I wanted to point out on this chart here, and maybe Jason, if you could bring it back up for us, Jordan said something very interesting, guys. He said, if you notice, there are a bunch of supply zones. I did not hear him say the word demand one time. You know why? Because there are no demand zones, which means if there's no demand zones, I'm going to ask the audience here, since we got 160 people watching live, if there are no demand zones, should you be thinking about buying? Just type it in the chat, yes or no. If you have no demand zones below where price looks like it will turn, should you be buying at all? I'm hoping that we get a resounding, I guess, unison of correct answers here, because honestly, this stock to me will probably be under 150 within the next 60 days. And that still would be overpriced compared to its IPO offering of 120. All right, Dexter, you started off the landslide. I'm hoping of just no's, right? There should be resounding no's. And it's tough because you're being pushed by the media to buy this one, right? They're making Snowflake out to be the biggest company in the world. They're competing against Amazon and Microsoft. That's like me. I'm 160 pounds. That's like me going in against John Bones Jones and Mike Tyson in a fight, and they're in the same ring together beating me up. I'm not going to win this fight. Good luck to Snowflake. All right. Jordan, I got you with the Snowflake one. How about Brock? What's your next stock that you think is a hot stock of the day?
So let's go the opposite route, right? So Snowflake was an IPO. Let's talk about a few stocks here over the past couple months that have gone the opposite direction, right? Okay. Declaring bankruptcy. How about that?
Love it.
Kodak and Hertz. So either one of those. Let's take a peek at I guess Kodak first.
Okay.
Right. So these two especially gained a lot of publicity through the Robinhood quote unquote traders, right? At these times, these were like the top trending stocks on Robinhood. Okay. And both of these companies were actually declaring bankruptcy at this time. And you would think, okay, bankruptcy, these things are going to zero. Well, if you actually look at the chart, the price went straight up. I mean, look at Kodak there, went from like a penny stock to over $60 at one point, right? Now, this just brings up some, it gets into that fear of missing out. And this is what you don't want to get caught up in. Just because it's being published on a hot list or a trending list on some platform or brokerage because it's up X amount of percentage, you got to start taking a little bit of common sense into the equation. Okay. When somebody is saying they're declaring bankruptcy, do you really think, okay, that stock that was, a penny stock is worth $60, So when you look at what happened after that transition, a lot of people got burned on that, just not understanding what they're actually trading and what could happen when somebody actually declares bankruptcy. Okay. And even if you were to buy it and you held it through that bankruptcy, all the big players, all the big investors are going to get paid out first. So even if there was anything left, you're going to be holding a bag at that point in time. So I just like to point out Kodak and Hertz was the same exact way. You want to be careful just because something pops up on a list. Always do your due diligence to make sure you understand what you are trading. And once again, just waiting for quality opportunities. If you look at Hertz, it actually gave you an opportunity to be a seller on it from that pop in price when they started talking about bankruptcy. So, there's still opportunity to be made, but you want to make sure you're trading in the right direction and you understand what you are trading. So those are two that have been all over the news, especially during this pandemic in the past couple months. And, just once again, reiterating using good risk management and doing a little bit of due diligence before you just start throwing trades out there on something you have no idea what you're trading.
So you're saying you shouldn't just sort your watch list by most volatile, like, stock up 11,000%. Let me go take a look and see if I can find a demand zone. You don't think that that's necessarily the best approach, Brock?
Yeah,
probably not.
I'm going to make a note of that. Thank you.
It's entertaining to me. If we go to this chart again, I'll really quickly highlight a couple points here, and I want to do two things. I'm looking at Hertz right now, and guys, in a period of 3 days, it went from $2. Actually, not Hertz. Let's go back to Kodak. In a period of 2 days, Kodak went from $2. Of course, I didn't type it in caps, so let's start with Hertz. Okay, I'm messing up here. Hertz went from 78 cents to a high of $6. And the irony here is when it did that, Hertz made an announcement that said, shareholders will not get any money from this. We're going bankrupt. If you look over here on Robintrack, and this is why I wanted to kind of bring this one up. Let's bring up HTZ. And guys, if you want something fun, this is a great resource. You can go out and see what the Robinhood traders are buying or selling. And you'll notice here that the Robinhood traders were just gobbling up. The green line here represents the number of holders at Robinhood. And as Hertz was in an absolute free fall, coming off of that $20 mark, is it $20? $20 mark. They're the ones who are just buying and pushing it up. And it continued. That $6 spike you saw, that was like the biggest surge in Robinhood buyers. So really what it's telling us is some Robinhood trader is probably still holding this long at $6.30 because they had no clue what they were doing. Now, if I go to look at Kodak, which is going to be a very similar
just give it time.
picture,
It'll come back.
It's going to come back, right? Smoking that hopium out there.
Exactly. Just hold it.
Yeah, you don't come
I mean, look what happened to Kodak, though. Just
Kodak
hold it.
is worse, right?
Just hold it.
For those that might not know, and Jordan, you might not know this because you don't like to look at the news. Kodak, look, you botched the digital camera. They owned the digital camera and they botched it. I mean, we'll stick to film. No one wants digital. It's like saying no one wants a PC in their home. They got a grant of several $100 million to now do a COVID vaccine. I don't know. Part of me just goes, what? How the heck does that work? Something's wrong with that picture. And people gobble it up, and here you see the price chart. Kodak was at $2, and in 3 days, it hit a high of $60. Now, I'm going to tell everybody right now, I am not interested in trading anything that moves like this. I think if you have an interest and concern in your longevity as a trader, you shouldn't even entertain these ones. That said, I actually looked at Kodak when it was up around $45 at buying some puts on this. But because the volatility was so high, the put prices were just off the charts. And Anthony says maybe some puts. I looked to buy puts, but they were so expensive. I just said it's not worth the risk out there. And for me, this is one of those extremely risky juggling a chainsaw type of stock. And it's safer for us to move away from that and find something that's more stable. Now, I know that Jordan doesn't like to look at these ones. He's got a stable of stocks that meet certain price criteria. So for Jordan, a hot stock is something different. Jordan, give me an example of something that you think is a hot stock where you're not throwing yourself at all this risk like we were on Kodak or Hertz.
Yeah. So again, like you said, my definition slightly different, much more tempered in that sense. News is not the driving force in what I'm looking for in a stock. What I like are things that are trending, things that are making a pretty picture. And Brock really basically said it. If the picture is that of clarity, and clarity, of course, is somewhat subjective, but clarity per the rules we use here in our strategy, if I see something that's nice and trending or that offers some, major move, if it's not one of these news-driven moves, perhaps it's an opportunity to step in. So let's pull up a chart. I love Apple. So let's pull that up for just a minute and kind of beat this one apart, because this is obviously everyone's favorite stock outside of Tesla. But, a year ago, Tesla wasn't as much of a game player here. Apple, just, everyone, if you ask them, what's the story with it? Where should I buy it? You never hear someone say, right, Merlin, have you ever heard anyone said, where should I sell Apple? You ever hear that before, Brock?
I have to play devil's advocate. I hate Apple, so I can't tell. In my trading plan, I can never trade Apple again, so I'm out.
Oh, there you go. Perfect. Excellent. Okay. Brock, have you ever heard anyone ask, hey, where should I sell Apple? Or do you typically hear, hey, where do I buy Apple?
Yeah, I mean, for sure,
So,
for
you
sure,
know,
buying.
one of the things I look at is, this thing was trending very nicely. Obviously, it looks like this powerful uptrend that you've got going on. But if you kind of go up to that 130 level, and again, this is right before it split, you've got that little area of demand up there. Yeah, there's kind of like that little spot right there. And if you drop it to a 60-minute chart, let's take a look at that. So this is kind of what I'm looking for. So this chart, and it's so weird for me not to be able to get my hands on it. I love that. I love being able to manipulate it. But that last run up there from about 125 to 135 was fantastic. But the thing I look at is this kind of herd mentality. Everyone looks to buy Apple. But the second that 125 area started to break, one of the things I really think is important, if you're going to trade hot stocks, things that are in the news that everybody loves, is when the trends start to break, when it reveals itself that something has changed, it's important to not just go and say, this thing is hot, I'm going to look to buy. I'm not saying, okay, let's flip around and go short, but it may be one of those times when the herd is right, go with it. But the traders who follow hot stocks, they make the mistake of continuing on with it just because it's broken. It breaks all these major technical levels, but they say, okay, it's down 10%. It must be a buying opportunity. And if you look, right as we broke 125, there was a major dropout in this price. So for me, I'm willing to trade with the herd, the hot stocks. It's kind of the topic here. But the second that area breaks, it's no longer something that I want to just go and attack. I've got to now go from, I'm with the herd is helping my position, the hot stock is in play, but then once it breaks, it's no longer what I'm interested in. And I always kind of joke about that we are traders, but also traders. Our job is to go with the market, one more higher until all of a sudden it breaks. And when it breaks, yes, it may be a hot stock in the news, but now it's time for you, perhaps as a OTA student, prospective OTA student, to say, hey, just because it's in the news doesn't mean I have to be one-sided with this. We look around and say, hey, there's a supply zone. Maybe I'll go the other way. And as hard as it is to actually push the button and say it's time to go short this thing, it revealed itself as an amazing opportunity. Something I actually talked about in one of the XLTs. And it was funny. I was teaching an XLT on Monday morning, and I put out an opportunity for us to look at a short on the 15-minute chart of Apple, but we don't have to go too deep into that. But every single student, I mean, like there was like 150 people. They were all like, oh, you can't short Apple. It's going to 1 million. And I'm like, yeah, are you really looking at the news? Are you really thinking, oh, it's this hot stock I've got to buy? Really, we're falling victim to the market changing direction. So we've got to be willing to be traders, and go the other way. I don't know if that kind of segues into what you're talking about here, but
No, it's good.
This is the way I see things. I don't get caught up in that news. I get caught up in the technicals and let the chart tell me if it's hot, if there's opportunity. Otherwise, there's a new train leaving the station. Go find something else.
Right. And I think the important part here, and I think we all are cut from the same cloth on this one, is while my interpretation of the term hot stock might be something different, just crazy, volatile, and wild, it certainly represents opportunity one way or another. And I think what's great about what you brought up, Jordan, is Apple's an established company. Yes, it does have volatile swings, but it's not going to be going anywhere. So when you find nice swings there, it's your hot stock because it now is giving you opportunity.
That's right.
And by the way, you open this up by saying, when you've ever heard anybody say sell Apple, I'm saying sell Apple. I mean, right now you're on a downtrend for the past few days. It's making some great supply levels. I see some great shorting opportunities coming for Apple. I just can't trade it.
No, I understand that. But again, you are willing to look at it and say, what is the chart telling me? Right. There is no one. I teach a core strategy class last week. Every single student who didn't understand our rules at the time is like, where do I buy it? How can you be selling it? This is the mental shift is you've got to be willing to go with what's actually happening, not just, oh, it's hyped up.
Right.
So, you know, if you do it that
Brock,
way,
you know, I know
fantastic.
you were talking about some of the companies earlier, and most of your stuff wasn't on that stable company list, right? It wasn't these are good bellwether companies. What else do you have to look at with regards to that hot list? And by the way, viewers, if you have something you want us to check out, time permitting, type it in the chat. Maybe we'll bring those up on the show today and see if we can offer some insights into your hot stock.
So another one would be Overstock.
Oh, love this one.
Yes, I know you do.
Probably one of the biggest gainers of the year, by the way. And by the way, everybody, Overstock came out with a cure for cancer, AIDS, and COVID in the same pill. I'm completely joking, but the price chart you see here doesn't reflect on the hourly, but let's look at the daily here. Look at this price chart. You might not understand the scale. Back in March, guys, this was a $2 stock. It hit 130 bucks in 6 months. That's a 4,000% gain. And it's Overstock, guys. It sells furniture. It sells, couches and patio furnitures online. So what is it about Overstock? What should we be thinking here?
So if you go ahead and change it to a weekly chart for me, now once again, we get into some of these stocks that just go absolutely crazy, and I always like to look at the high of where it traveled to and just put myself in the shoes of the person that bought that high, right? And kind of what they're thinking at this moment in time, because up there around 130 or so, you got to understand people were buying it at that high after it made almost, 4,000 point move there or on a percentage basis. But at the same time, we still have to listen to what the chart is telling us. So when you look at that rally that it created this year, right, it actually created a decent opportunity to go long. Right around the 49. I've got, let's see here, 49 to 38.50 area from that little basing action. And the thing that really kind of draws our eyes to that area, if you kind of scrunch the chart a little bit more so we can see back to the left, that is the basing action that really took out the previous high on Overstock that was back there around the $80 to $90 mark. And so for some reason, right, there was definitely way more demand in that area than there was supply, propelling it significantly higher. It's probably not a bad area to start looking at, where this big drop in price might actually stall and or reverse. So even though, we try to contemplate why is it trading at $120 when it sells furniture, if I just look at a chart on a technical basis, we find an area of imbalance there, and no matter what it does, we gotta listen to the chart. So,
I like that. And I think what's important here, especially since most of your online trading academy graduates, you have to understand that, normally I would look at Overstock and say, you shouldn't touch it. It moved too much. It's got too much volatility. It'll gobble you up. But what Brock points out is correct in saying, look, I'm not looking to buy this thing up at that $71 mark or the $60 mark. I need to let this fall enough that pendulum would have swung far enough to the other side. And maybe I am buying it at a discounted price, right? And of course, if you're a fundamental analyst, it might be a different picture. But, there is a demand zone that's created right around that $49 mark. And maybe that's where you take your stab at it. That's okay, because it was up at 130. If you buy it at $49 and it was at 130, you're probably doing rather well. And of course, there's multiple ways you can be doing that. I'm not saying that we have to be sitting here buying Overstock shares outright. You could be selling puts, right? You can probably sell puts right now on Overstock and collect enough premium to make it worth your while at 49. And if it gets to 49, you own it. So to me, there's a lot of different ways to skin this cat. You just got to be careful, because when something moves this much, your normal stop loss is probably going to be taken out. So you want to accommodate for the volatility there if you even want to trade these at all. Anthony says, been there, done that, greed bit my butt. It will do that, my friend. Unfortunately, that's the sad reality, which is why we wanted to bring this one up, because there are hot stocks that are just trending strong and are real companies. But then you get other companies that are just, you shake your head and go, really? Like Hertz. Hertz said, we are going bankrupt. Our shareholders will have no value. And Robinhood traders bought more shares of Hertz than any other company in like that 2-week window. Ridiculous. Let's look at one more before I dive into some listener ones here. And by the way, just so you guys maybe want to look, we've got, we'll do Peloton. I see Nike, they just reported earnings. And NNOX, because Sharon sent that one, and we'll look at that, and maybe AMD. We don't want to go too long on the presentation here, but Nikola. For those of you who might not know, Nikola is a new car company, well, it's actually a hydrogen car. Beautiful looking vehicles, and right now they're under fraud investigations with the FTC. All allegations at this point, but it's a very, very, we'll just say audacious venture that they're pointing out, trying to accomplish here. Everybody wants to compete with Tesla. I'll bring up the chart of Nikola. This is something I talk about on my show, and we were basically, when this was over $70, I was saying, don't buy it. If anything, this thing's going to be going back down to a much more reasonable price. You guys see today, now it's at $21. This daily chart really speaks volumes to it. Personally, I think you should just stay away from a stock like this, because right now you don't know what to believe in the media. It could be a complete lie, could be legit, who knows? I'd say stay away from it. Do you guys look at this type of company and find something there technically worthwhile on Nikola?
Just briefly looking at it, I would probably say no, other than maybe some selling opportunities a little bit back up from where the current price is. But just looking at this, and once again, going back to the volatility that it's had, and then some of the gaps that it has on the charts, it's just like when you look at this, it doesn't look smooth. It doesn't look clear. And I just like to look at a chart and see something that's in a nice trend, either up or down, and not something that's got tons of gaps all over the place and has a price range of, $5 to $100 in the matter of 6 months.
It's pretty crazy.
Yeah, this chart gives me anxiety. I like stuff that has a lot more history. There's just not enough, you see this thing come to life, and it's like they're trying to revive something that perhaps is shouldn't be revived. So betting on a turnaround story is, I think, just that. It's betting. And then going short something like this is it's you're following let's call it the trend. You're following all the technicals, but at the same time, if you take a position like this into the close and you hold it overnight, anything could happen. I mean, look at that explosive move in June. You take this thing home with you short, right? It doesn't matter if you have a stop. That's one of those things where you wake up the next day and you question why you made that decision. And it can put the fear in you and cause you to end up not taking good opportunities that you see in more stable companies that offer real, true opportunities. So it's just be aware that, you take this thing short into the close, you could be in a lot of trouble. You buy this thing, it could be 20% lower the next day. It's really just a gamble.
Yeah. And it's so manipulated right now. That's the thing that scares me about Nikola. It's so manipulated. Of course, anything with the EV stamp on it, electric vehicle or alternative fuel vehicles, are really booming right now. So guys, this is one of those ones I would say shy away from. It's got way too many legal problems right now to make it worth your while. Let's see. J Rob says Peloton. Let's take a look at Peloton. Of course, anybody who comes around the office at Online Trading Academy knows, and this shout out to my coworker Carter, I make fun of Peloton. Why? Because come on, almost every garage in America has got an exercise bike or a treadmill that someone spent good money on that's doing absolutely nothing but collecting dust, and you can't even get rid of it on Facebook Marketplace or OfferUp. So now you want to buy a multi-$1,000 bike so you can ride in your house? It sounds great during COVID, but come on, I don't know. That said, this looks like a great chart. It looks, this is a sexy chart we got going on here. It's a beautiful 45-degree angle line. What's your take, Brock? Jordan, what do you guys think?
Yeah, this is Brock, go ahead.
Yeah, I would just say now looking at this compared to the chart on Nikola we just looked at, right? Much clearer, nice trend, easier to find, the zones or the areas where you want to be participating. It's got smoothness to it. It's very symmetrical as far as measured moves as well. And that just makes things a lot easier on our eyes when we're hunting for opportunities on this. So yeah, that's my take. That's the type of charts. It could have been bubblegum sticks or baseball cards that we're looking at. And if it had a chart like that, that gets me excited.
Yep. I feel pretty similarly. I mean, this is clearly a nice uptrending market. Nothing seems to be too crazy. You've got that one candle there, that big red one in September, and it's kind of bigger than your average bear. I tend to look at the average candle side. I find the biggest candle and say, okay, that's the worst case scenario so far. That's what I've seen it can do to me in a day. And then I say, is that too intense for me? And that candle is starting to get a little bit whipsawy for me. But at the same time, it's respecting that nice uptrend. Again, I'd be hesitant with something like this to really begin taking these things into the close. So if it was something I was going to be looking at, I think of this more of as a vehicle of like, there's clearly buying in this market. If people are really stepping in and buying truly higher and higher and higher, and this concept of buy low, sell high really doesn't exist, the game right now is buy high and sell higher. So if that's the case, I'm going to look for short-term pullbacks and trade it intraday to the upside, or so that I don't take it home and take that risk. If I do take a position that's going to be more swing in something like this, it's probably going to be on the premium buying side with options so that I know I've got fixed risk associated with the trade. That way I don't end up in the universe of, okay, it does that big red candle overnight, gaps against me. And now, I was the smartest guy for trading the trend until it just wasn't. At least I've got my limit in there with a call option or something like that. Or at least a spread of some
I
kind.
like it, guys. I'm a fan of I'm not a fan of Peloton, the bicycle, but I'm a fan of the stock here. I think it looks great. And I think if you go back to kind of some of the principles we teach in our classes, it's like, look, one of the main things you want to understand is what's the trend. Right now, we are way on the top of the curve, way extended. I certainly wouldn't be looking at buying right now, but there are some areas of demand. If we pull back to maybe this, I put a moving average on here just for fun, but there's some demand zones that have formed that, maybe a good buy point going back in here on Peloton. I think that there's certainly some potential there. And it's one that I'm not like instantly going to just discount. For example, Nikola. I'm throwing that one out the window. I could care less about Snowflake, garbage. Just open up a garbage can, throw it in, don't even look at that one. This one actually has some opportunity. So, these are all hot stocks because this is the one that people are talking about so much in the media, and it actually has a great trend. So this one I'm feeling more comfortable with. Let's do one more, and then we'll wrap up here. I want to keep it under an hour. DraftKings. DraftKings has just exploded recently, given what's gone on with the football season and playoffs and sports betting going on right now. So I've got the chart up here. I can take that moving average off if you guys want, but right now it's just sitting there. What's your take on DraftKings? Brock, I'll start with you.
So just kind of going back and segueing from Peloton into this, another thing to keep in mind, right, is these are stocks that are outperforming the total market in itself. And so what that does is kind of lead into a different question, as if, what if the market goes through a corrective phase and we have another, let's say 20% drop in the broad markets? What are going to be some stocks and some charts to look at once the broad markets get back to some quality areas of demand as well? And so these are, DraftKings, Peloton, these that are outperforming the market substantially are going to be the first areas that you want to start looking at. So just kind of pulling in the broad market perspective, because you still got to listen to what the total market is telling you. You don't want to just go out and buy these because they're strong stocks, but yet, the market's going through a corrective phase, and that's likely to pull these down with them. But on DraftKings specifically here, we've had, once again, when you look at this chart, it's very easy to understand what the trend is, right? There's no hesitation as far as maybe it's up, maybe it's down, maybe it's sideways. No, it's up, right? And we've had this nice rally here over the month of September, and it's really kind of created a few different areas worth looking at. That one right there, right around the 43.50 mark. And then even just a tad bit below that too. Yeah, right there.
Yeah, I totally agree.
And, looking at that area, what's exciting about it is that's what was able to propel price to a new high and wipe out all of that supply back to the left. So that's kind of paved the way for higher prices. Now, you know, the retail novice, when they hear all of this on the TV, oh, DraftKings up, you know, 10% today and it's going to the moon. They're the ones that are running out there and jumping in at the top of those big green candles. And what we're doing and what we teach, right, is waiting for that pullback to that quality area where we can justify the risk and mitigate the risk much more effectively and efficiently, buying when prices are pulling back compared to, you know, all-time highs.
Yeah, you know, with these, to me, there's an inherent danger of something like DraftKings. And I know this goes back to maybe some of the fundamental side of it, but I look at something like DraftKings, you guys have to understand that one of the major risks here is we've got NFL season underway. We got NHL playoffs. We have NBA playoffs. That's where they're making their money. We also have COVID right now. And you see all these players out there running. I saw the locker room meeting with the Raiders, who had an unbelievable game, by the way, on Sunday night. Half the team wasn't wearing masks. And if all of a sudden COVID starts going to spread rampant in the locker room and a team says we're not playing, the NFL stops, gambling stops, DraftKings could take massive hits in a short period of time. So these are those things. If you are trading the quote unquote hot stock, you have to understand why it's hot. It's hot because sports are back on. And if sports get taken off the table, DraftKings is a dead duck. So these are kind of things you really have to be careful of and think in the back of your mind if you're going to be playing those ones that can be impacted so quickly by a news announcement or something like that.
Still got horse racing. I mean,
horse racing. Yep. It's a little bit safer from a COVID perspective, right?
I guess the real question is, as exciting as it is to look at hot stocks, right? Is it really something that offers tremendous opportunity to an active trader, right? Is that something that we're, you know, like I love the idea. I look at this and I listen to Merlin. You've got such a great perspective. If you really understand why these stocks might be doing what it is they're doing. And I just say, why do we get so excited about things that everyone else is doing? Let's take the perspective of careful, like back off that, like looking at the hotness and figure out where we really going to take interest. Now, I know that that's a little bit counter to that exciting fun, but in the end, you know, one of my mentors always said, like, the market will give you kind of whatever you're looking for. Like, if you're looking for a good time, you can have a good time. You might just not make very much money. I look at this and I say, you know, if you're looking to trade the hot stocks so you can talk to your friends, that's awesome. But in the end, we should be running trading like a business and think about the fact that these might be riskier than some of the other opportunities out there. So I always like to back off a little bit of that excitement because, and Merlin makes a great point, which is this stuff, anything can happen with these. So stick with something with a little bit more solid fundamentals and also just more technicals that has more history.
You know, it's all fun and games if you're on the right side of something. I mean, I can't tell you the number of Gen Xers or millennials I know that are talking about how great of traders they are at this point because the market's just gone up since end of March. You know, to me, and I agree with you, Jordan, it's really about consistency. And while you look at some of these stocks we looked at today, could I be consistent with Apple? I probably have much greater probability of being consistent with Apple than I would something like Hertz or Nikola or Snowflake, right? Just because there's such crazy volatility that maybe my maximum risk is 1% of my portfolio on a trade. I wake up one night on a Tesla trade and I'm down 5% of my portfolio. My whole metric, my risk management system is gone now. So, you know, I think part of what we want to get to today is just saying, look, you want to make sure that if you are trading, guys, you kind of want to avoid the sensational hot stocks, the ones that have some weird factor driving them that's almost unexplainable, and focus on the hot stocks like Jordan's talking about, which, you know, he was looking at Apple. He also had a couple others here, but unfortunately, we don't have time to get into them. Yeah. But, you know, stable companies. You had AMD has been flying lately, doing really, really good, right? That's a good company that offers opportunity and probably not going to have a 50% haircut tomorrow like Nikola could or Snowflake. So I guess the takeaway here is we're all trying to succeed in the financial markets, whether your goal is short-term income or long-term wealth growth. Whatever that goal is, risk management's number one, and hot stocks are probably the quickest evaporator of your accounts. I've been doing this a long time, and I can tell you when I get caught in a high-flying stock, usually doesn't pan out very well. So that's kind of what we wanted to focus on today. is the risk side of it. Now, Todd says, where can you find these trades? Jordan, you might spend a minute or two talking about how you're finding these opportunities, because I know you are scouring for the opportunities, right?
Totally. I know that we're probably short on time, but
we'll wrap it up right for this one.
I can't help it to just point out one thing in DKNG is that, these stocks that drop so hard and people think, oh, now they're going to go. That area that Brock is looking at, what's so great about that little area is that everyone who went short there, who doesn't have risk management, is going to be like, please, if it just comes back to that area, the wishing, the hoping, the praying. So using the technicals, waiting for something to come back, it's going to be, that's really an area that a lot of retail novice traders are going to make a mistake in. And that's why I like that area. And that really makes that a whole bunch more interesting, because retail traders are not going to have that risk management in place. But as far as how do you find stocks to trade, how do you find opportunity? I love to scan for things that have high quality trends. I like to make sure that there's many active participants. This is a really critical part of stock trading, because if there's a lot of participants, tons of people with billions of dollars, millions, whatever the number is you want, the more money that's at play in a company, the harder it is to manipulate it with huge, gigantic moves, perhaps. Okay. So I like to look for things with a lot of trading activity. I like to look for things that are moving, but not ripping your face off moving. Consistent, steady moves where I can take my piece, someone gets their piece, and we get our, we're all happy together. Yes, of course, there may be a loser and a winner here and there, but the idea is nothing's ripping your face off. Trading is, in essence, a little less interesting, maybe even boring, if you have the opportunity to just do the same thing over. So I look for stocks that are trending, pretty pictures. I like lots of participation, so I don't end up getting caught in these 20, 30% moves. And I also want to make sure that they're moving that, consistent amount every day. Lots of participation, relatively consistent movement. So as far as scanning for it, those would be criteria I would look for. I don't know if that helps.
So Todd, you said how. Look, it's simple. You can see on the screen here, I've set up a watch list and I just added these ones in. What I would recommend is finding stocks that when you come across them, they have those requirements that Jordan talked about. And if you are a core strategy student, you know what those requirements are. There's specific requirements for average true range, for volume and things like that, even price. So we weed out the stuff that might not have the movements we're looking for. Then you just simply click through them every day, right? There are some times where you'll scroll through your list. Here's AMD, for example. Okay, well, AMD had a huge run up. It's starting to trend down. Maybe I'm looking for shorting opportunities, but I know I've got a liquid stock. I know I've got a stable company. I'm just going to be riding those big trends and swings. And that's how you find them. I think it needs to be worked on for most people is probably money management, because once you're in a trade, what's to say that this AMD short right now at $81 or $82 isn't going to turn it all the way down to $50 if you're short? That's about money management and trailing stops and things like that, which is beyond the scope of this webinar. This is really just saying, hey, there's different classifications of hot. There's the hot, crazy, wild stuff that you just want to leave alone. And there's the hot ones you go, these are the ones that I'm consistent with, that I can consistently go out and day after day and make trades on and achieve my goals in the market. And that's kind of the point that Jordan was making here. So guys, I'm going to try to wrap it up here. I know I tried to wrap it up by the top of the hour, and I'm a little bit late here. So Brock, Jordan, I want to thank you guys so much for coming on and giving us some insights into what are the hot stocks and how you trade those. I really appreciate it.
It's a pleasure.
No problem.
And,
for everybody out there, if you'd like to see Brock Pierce and Jordan Matthews, they are doing some online classes, quite a bit of online classes, Online Trading Academy. So I'd encourage you to check that out. For those of you who are with us today, I just put a survey in the in the chat on your YouTube channel. If you fill that one out, that will give us some insights as to what you enjoyed, what you might like, and maybe how we can improve some of these webinar series. For those of you who are wondering about our next webinar series, we are going to have none other than Mr. Todd Davis on the program. He'll be doing a show. Oh, what's his going to be on? He's going to be doing, it's called the GPS, which is the guided practice sessions. That is going to be next Thursday at 3 p.m. That's October 1st. And of course, we'll give you guys some information about that one, but you guys might not all know Todd Davis. It's awesome. And he's got just a lot to talk about with guided practice sessions. So again, thank you guys so much for joining us. Brock, Jordan, thank you very much. I look forward to, maybe we can do this more frequently. We'll do it every couple of months. You guys good with that?
Let's do it.
Yeah, there'll be an entirely new list of hot stocks, I'm sure.
I'm sure on your end is be the same list. All right, guys, thank you everybody so much. Again, if you enjoyed today's webinar, do us a favor, give us a little thumbs up, and we will see you next time on our fall webinar series. Take care, everybody.